All right, what's up, people? Yeah, we're Sean, aka the real estate guy. All right, if you saw my video where I talked about the interest rates aren't high, when you look at it from a historical perspective, they're not high. Now, for all you people that's younger, the only thing that you know is during the pandemic era. Yeah, it's high because that was done to control the economic climate in the U.S. from going into a deep depression. So they had to lower it to keep things running. But normal conditions, that's not the interest rate. But in my video, what I want you to do is go back and look at that one if you haven't looked at it. It has shown where the rate went below four into the threes before. So, it depends on how old you are. It depends on what you've seen over your time in life, right? And it depends on what you know. And if you do this research, in my video, it'll show you how to do the research so you can be educated yourself. But today I want to show you how interest rates versus the price affects everything. So I found this house. It's a random house. Looks like it's been renovated, right? Looks like a nice little renovation that occurred in this one. All right. So just wanted to show you the contents of what the house looks like. All right. Now, this will reveal what the price is going for, right? So 330,000. So the way I structured this as this example, and we'll put the buyer example. Right. I believe in education. I believe in transparency. I believe in showing what I'm talking about. I'm not just going like if anybody else just talks and they can't show, then how do you know they're telling you the truth? Because today's world, we're in a climate in the US where lying is becoming prevalent. It's becoming the norm. So I don't do that. I want to educate you, have you mobilized so that you understand how things work and how things can go in your favor. All right. Because it's your money. All right, so they got this one listed at 330,000. Now let me explain something about price. Price is what the seller wants for a house. That's what they want. Doesn't mean that's what they're going to get. Doesn't mean that price is correct. It's my job to figure all that stuff out and then present to you the proof if it's worth it or not. And then I educate, make suggestions, ask you what you want to offer for it, and then I'll make a suggestion based on what I know and based on what I presented to you. So let's say for now, this example is 330,000. You put an offering on this house. Now, also, your lender does this part because he has the system where you have fees that you have to pay. So my system can't calculate that totally, right? But I'm an educated realtor. I just understand this process and can explain it to you. You will get accurate numbers from a lender. I am not a lender. I'm the realtor. I'm the one that deals with your contract to purchase. I'm the one that deals with the negotiations. I'm the one that deals with your home inspection getting done and anything from a fallout on the home inspection. I know negotiators to get these things repaired. I am the negotiator. I am the deal maker. Or, in some cases, you know, the person that educates you about the buying process. All right, so the average interest rate right now is between 5.99 and 6.3 from what I've been seeing. All right. So let's break this down. So typically we don't do a percent, but we can do a percent. Earnest money is the money that you have to put down on the house. All right. As a deposit. Now that money goes towards your closing costs. I will explain that in another video if you don't know what closing costs is. All right. So we got all that set up, right? Now, when you're going through buying a house, you have all these different numbers, right? That affects everything. This is your mortgage type. Conventional is another mortgage type. You have to put more money down. FHA is 3.5% down. Now, it doesn't mean it has to come out of your pocket, but it can come from a First time homebuyer program. It can be a gift given to you by your parents, cousin, no, sister or brother, right? They can loan you money to help you buy your house. All right, so you got transfer tax. When a house is sold, there's a transfer tax that you have to pay. Homeowners insurance, that's the insurance to protect the house. $700 is generally like the average, 800 somewhere around there. All right, so here's your numbers. 330,000, you have to cover $16,522, 21 cent in closing costs. Escrow is money that the mortgage company keeps in a vault to cover things like taxes, future taxes, and stuff like that. This gets reimbursed to the seller. Total acquisition cost. So a $330,000 house, after they add up all the funds, you're paying $350,000 for the house. All right, now you could get some seller assist. What is seller assist? Seller assist is this. I'm selling my house to you and you need a little money to help with your closing costs because you don't have a lot of money or you just want it. I may give you $5,000. So I'll show you what this looks like though. We're not going to use 5,000 as an example, but I'll show you what this looks like. Sometimes we do it by percent. All right, so pay attention. I haven't hit the enter button. But once I hit the enter button, watch how this number changes. Watch these numbers change. They go to earnest money deposit. Let's take this out again. Okay, let's put it back in here. See how that number changed? Needed cash to close, it changed because the went from 26 to 21. All right. So typically I get that for clients for the most part, as long as the seller is okay with it. All right. So let's look at the monthly payment. 330,000 at 6%, 6.3% interest is 24.53. So let's play. Let's play. See, changing the interest drops it by a couple dollars, right? Makes it maybe more affordable. But let's do this. 6.3. We jumped it back up to 24.53. Pay attention to that number. That part is green. So now if I take, let's say $30,000 off, even at the 6.3, you see how much that goes down? So it goes down a lot, right? But the interest rate is still high. Okay. 290. So it drops down to 21. So when you're going shopping for a house, what you want to have your lender do, it's going to run your numbers. He's going to calculate how much money you make, assets, debt to income ratio, and then he's going to give you what you can afford. Make sure it's based on that monthly payment. You may not work with one of my lenders. My lenders, they do it that way. So that way you know this is the monthly payment that I'm looking for. So this is how much of a house I can buy. But when the prices of the houses come down, even at that 6.3, that is considered the average when you look at my video. So it comes down even more. But just look, for every $10,000, it's not coming down a lot, right? So even when you go to 270. Now, don't try to do this at home or on the internet because the calculator that you're using doesn't have all these calculations in it. So let's say if you need a $2,000 mortgage, you need to be at 270. But let's say the interest rate drops down to, Let's do 599. It goes down by a little bit. Now, let's say it goes down to 5.8 now. Goes down even more, right? But the trick right now is this. The houses went up so much, right? So let's do this. Let me break this down so I'll explain to you how I explain it to everybody. All right, let's go back to the original number, 330. Okay. 330, 6.3%. Okay, so that house would cost you 24.53. All right, so let's say you got it for 24.53. All right. Now, let's say a month after you got it at 6.3, right? That let's say 5 months from now, or let's say 6 months from now, the house jumps up to 350. If you wait to buy it at 350, it will cost you that much money. Now let's say this 630, uh it dropped down to 6%. Now look at that. The price of the house went up to 350. You waited for the interest rate to drop down to 6%. But look what that monthly payment did. Is above 330 at 6.3%. You'd have been paying 24. And this is why I preach to many buyers it's not good to wait because the price goes up. Why did the price go up? Supply and demand. Basic business principles. Supply and demand. When the demand is high and the supply is low, everyone is able to cost more money for whatever product that you're selling. It doesn't matter what it is. You hold the leverage as the seller because I have a small quantity and I have the buyer base right there because I see it. When the pandemic happened, that's what happened. And realtors teach this to their buyers because I'm gonna be truthful. Yes, it's about selling houses and getting the seller for the most money. But when realtors sell for the most money, they get more money for themselves. So many of them are driven by that incentive to sell. I'm just gonna be transparent and be honest with you. Me, my job is to do the best job I can do. I'm not focused on what I'm making. My job is to do the best by my client. But is that the industry's uh way? Not everybody does that, but many will do that. All right. So hopefully you understood this, right? A higher price, even at a higher interest rate or lower interest rate, costs you more monthly. And long term, it will cost you more money also. So here's what I teach. If even at a 6.3% interest rate, you can afford the monthly payment, then you buy that house. What you can control at that point is this. I took care of the price. I'm capped at 330. I'm not going to pay more than that. When the interest rate goes down, you refinance whatever is left on the terms of the loan, and there go your savings. It's a better approach that way because you won't be paying that. You won't be paying that. So look, so just in case all you want is more visual. So look, 330. So it went from 200, 200 and I mean 2,400, right? So just to remind you. All right, so it's 2,453. All right, give me a minute. I'm a little tired right now. Okay, we got that down. Okay, so let's drop the interest rate. Let's drop it to we doing 590. All right, we're gonna do 590. Okay. No, no, not 59. What the heck is going on? Come on. 5.90. Okay. So it dropped down to 2369. All right. So it's roughly $83, but times that over 12. You saved yourself $1,000 within 1 year. And if you times that over, the long term of the loans, that's a nice sum of money. But that saves you some money. So if you want me to do this for you individually or one of my lenders, we can set up a call. We can go over getting you pre-approved. We can go over your numbers. We can get you set. And now you're more powered. You're more educated through this process. So hopefully this helped you. Comment below. Let me know if this actually helped. Thank you and have a good one.